Coming up on Market to Market, the Brits say see you later to the European Union in a historic vote. Drones are cleared for commercial takeoff over a field near you. And wildfires pick up the pace as they blaze through the West. Those stories and market analysis with Mark Gold next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, June 24 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The winds of change blew through Europe like a cyclone late this week as the United Kingdom voted to leave the European Union. This is the first exit of a member state since the conglomerate began forming in the 1940s. Although the Brexit will take up to 2 years to complete, other countries will be monitoring the divorce proceedings to see if they too should join the exodus. Two of the most contentious issues in the Brexit Club were views on immigration and regulation. David Miller breaks down the impact on North America following the developments in Europe.
The vote was close. With only 3 percentage points separating the final outcome, the United Kingdom is choosing to leave the European Union. The EU, which rose from the destruction of World War II, was rocked by the decision. After surviving the addition of financially shaky nations, the reunification of Germany, and a world economic crisis, the 28-member union stands to lose a major portion of its financial base in the form of the world's 5th largest economy. The European Union and the United States have always been neck and neck in the race for number 1 as the world's largest economy. Even before the opening bell, stock markets turned turbulent around the world as global markets were in full panic mode. The Dow Jones Industrial Average plunged more than 400 points in the first 30 minutes of trading. Oil lost $2, and the Chicago commodity markets were lower even before traders took to the floor. The news sent investors running for more stable financial instruments. Gold added more than $50, and the U.S. dollar index rose 200 points. In the short term, a higher dollar will make U.S. agricultural goods less appealing when compared to other ports of call. But as the dust settles, it's the long-term implications that will have the broader effect. As the UK leaves the EU, there is a laundry list of agreements that remain in the balance. The Paris Climate Agreement with its cuts to greenhouse gases, a decision on reauthorizing the use of glyphosate herbicides like Monsanto's Roundup, and the multi-billion-dollar Transatlantic Trade and Investment Partnership, or TTIP. The strained TTIP talks have been in negotiations for years and were expected to have a $100 billion impact on the U.S. economy. Even though the EU is not a major trading partner domestically, according to USDA, in 2015, the U.S. imported $25 billion of high-value EU agricultural goods, making for a record $12 billion trade deficit in farm commodities. Data for 2014 shows $2.7 billion of U.S. agricultural exports went to United Kingdom kitchens. And Obama administration officials say there are no plans to negotiate separate treaties. Support for both economies came swiftly from Pennsylvania Avenue. President Obama referred to both the EU and UK as indispensable partners to the United States. Fallout from the decision is only beginning. The lights burned all night at 10 Downing Street as UK leaders made preparations to invoke Article 50, a request to leave the European Union. David Cameron, who spent considerable political capital on the referendum, will resign as Prime Minister in October. As the legal wrangling begins, the entire process for even a graceful exit may take up to 2 years. For Market to Market, I'm David Miller.
Most United States economic signals were already trending lower before the Brexit vote. Sales of existing homes rose nearly 2% to the highest level since February 2007, as buyers remained intent on purchasing homes despite low inventory. After a similar surge last month, new home sales reversed course, dropping 6% in May. Orders to U.S. factories for long-lasting manufactured goods declined in May after 2 months of gains. The Commerce Department reported a 2.2% drop, mostly on news of cutbacks in the energy industry. And the International Monetary Fund downgraded the outlook for the U.S. economy over concerns of an aging workforce, weak productivity growth, and increasing income inequality. Stateside, senators reached a bipartisan deal to label genetically modified ingredients, just days before a law in Vermont is set to take effect. However, the bill won't be completed in time, as congressional Democrats spent part of the week sitting down on the job in the floor of the House over gun control. Just down Pennsylvania Avenue, there was action on policy involving unmanned aerial vehicles. Delaney Howell reports.
After nearly a decade of deliberation, the Obama administration has finally laid out the guidelines for small commercial drones.
Mainly there's two uses. The first would be mapping with aerial imagery, and second would be using video footage and producing videos.
A report released in 2013 by the Association for Unmanned Vehicle Systems International, or AUVSI, stated that 90% of all commercial drone operations will be for precision agriculture by the year 2020. The new regulations will be in force starting in August of 2016 and are specifically designed for smaller machines of 55 pounds or less. Pilots of the aircraft systems will still have to abide by the guidelines set in place, including keeping the drone in sight, flying below 400 feet, not flying over people, and flying between first light and twilight. However, the American Farm Bureau Federation said they will continue to work with the FAA to downgrade certain limitations such as flying out of the line of sight. Quote, "To their credit, the FAA provided a lot of flexibility in the rule by allowing waivers to those restrictions. So hopefully that helps build the case for fine-tuning and tweaking the rule to better serve farmers and ranchers as this technology takes off." For agricultural producers, this restriction will affect the area of a field they can survey for tasks like terrain mapping, scouting fields for pests, and locating nutrient deficiencies. For Market to Market, I'm Delaney Howell.
Nearly $50 million in federal money is headed to 13 states to help conserve water and energy. USDA Chief Tom Vilsack announced this week while in Colorado that the money will pay for improvements to irrigation and water delivery systems. The grants will save almost 40 billion gallons of water each year in mostly western states. That same region is in need of nearly every drop of the precious resource to fight an extreme outbreak of wildfires. Peter Tubbs reports.
Wildfires continued to burn the American West this week. The National Interagency Fire Center reports 2 million acres have burned this calendar year, an amount not seen since 2011. Fires in Colorado, Utah, Arizona, and California grew as hot weather and dry conditions fueled the blazes. At least 80 homes were destroyed near Bakersfield, California, when a fire burned over 8,000 acres in less than 24 hours. The fire advanced 11 miles in only 13 hours at one point, and continues to burn uncontrolled. Cooler temperatures allow firefighters to slow the advance of 2 fires in the San Gabriel Mountains, northeast of Los Angeles. Over 5,000 acres have been blackened there.
As the weather continues to be hot and dry with a very drought-stressed fuel bed, conditions are very unfavorable for initial attack. So we ask that you please be careful as you're working in and around the national forest.
Thousands of dead trees around the working fires create ideal conditions for disaster. The combination of a multi-year drought and the voracious bark beetle has killed millions of trees in western states, leaving forests ripe for fire. Airborne tankers dropping flame retardant are one of the only tools that can be used in the rugged terrain near Los Angeles. Firefighters are assessing which ridges can be attacked by bulldozers and hand crews in a region that has not burned in several years. Suburban Los Angeles presses against the San Gabriel Mountains, putting thousands of homes at risk. Warmer than average temperatures are forecast for the coming week. While California is in the grips of the worst drought in a half-century, swaths of the Corn Belt are now drying out as well. According to this week's Drought Monitor, a band from Oklahoma through Ohio and into New England has dried out from a wet spring and is trending in the other direction. Despite scattered rain this week, high temperatures and a lack of moisture have begun to stress crops and slow growth. Little if any rain is forecast in the upper Midwest over the next 2 weeks. In Illinois, a tornado cut an 11-mile-long path near the town of Pontiac this week, injuring 4. The EF2 tornado had wind speeds exceeding 115 miles per hour. 30,000 households lost power as a result of the tornadoes.
Next, the market-to-market report.
The Brexit vote and changing weather patterns pressured commodities dramatically lower. For the week, July wheat dropped 27 cents, while the nearby corn contract gave back 6 weeks of gains with a loss of 53 cents. The strength in the dollar and global uncertainty contributed to the sell-off in the soy complex, as July bean sank 57 cents. July meal has dropped nearly 10% in 3 weeks, shedding $31.80 per ton. In the softs, July cotton fell 7 cents per hundredweight. Over in the dairy parlor, July Class 3 milk futures declined 17 cents. In the livestock sector, the August cattle contract weakened $5.85. August feeders increased $2.02, and the July lean hog contract faded $2.13. In the currency markets, the U.S. dollar index rocketed 123 points higher. Crude oil was poised to finish above $50 for the week for the first time in nearly a year, but that was before Brexit, and the contract closed 92 cents lower. Investors went mining for safe havens and found gold as the August COMEX price was up $27.60 per ounce. And the Goldman Sachs Commodity Index shed 8 points to finish the week at 368.90. Here now to lend us his insight on these and other trends is one of our regular market analysts, Mark Gold. Welcome back, Mark.
Nice to be here again.
Well, we are excited to have you. This is a busy weekend. We're coming off a very exciting end of the week with this Brexit vote.
I was up till 1 o'clock in the morning trading the markets. I haven't seen volatility like this in a long, maybe since September 11th. But the action, the gold up $100 at one point, closing about $50 higher. The bonds were up 8 handles, closed up about 4 handles. So we had pretty good swings in there. The dollar backed off its highs by a penny. So it was an amazing night.
Well, and as you mentioned, at around 1 o'clock Central Time, we saw beans down 25 cents. Corn was down substantially. I mean, it was everywhere last night was red ink, except for treasuries and U.S. dollar.
Yeah. But interestingly, the July wheat actually closed a half a cent higher here today.
Yeah.
So, wheat's been under a lot of pressure because of the harvest and rapid harvest, the good weather out here, and plenty of good quality wheat out there. But it did close a little bit higher today.
So now, since we're talking about wheat, you say rapid harvest, big harvest. The numbers coming out of Oklahoma and Kansas are phenomenal on this winter wheat crop. Does that tell you that even though we did close a little higher, maybe there's some downside risk ahead of us?
Certainly there could be a little downside risk. We haven't gotten to the brunt of the harvest yet. So there's still some risk out there. Funds are short trying to defend their positions there in the wheat. But the fact of the matter is, we're at 9-year lows in Kansas City wheat. If you're being forced because you don't have storage or whatever reason that you're selling wheat off the combine, we wholeheartedly recommend buying back fairly long-term call options here to replace it, because these lows at harvest are fairly typical. We may make the low on July 1st, July 2nd, somewhere in there. But longer term, I think this wheat market's got a chance to bounce back. So we would be buying back calls for that.
That's on Kansas City. Would you be making similar purchases in Chicago at this
absolutely.
point? Okay.
Absolutely. If you're selling soft wheat, we want to buy some options as well. I'd probably buy the Kansas City options because the protein wheat has a tendency to go up fastest first.
Okay. Now, as we come back to this Brexit, we've had a lot of questions this week from our viewers, and I want to just pick one. McKenna in Wayne, Nebraska is asking, is Brexit expected to affect the market long-term or short-term? This turmoil we saw Thursday night into Friday, are we going to see that for the foreseeable future?
I think we've kind of played the Brexit card for what it is. We've had other shaking events in these markets. The Swiss franc, about a year and a half ago, the Swiss government lifted the restrictions on the currency. It went through the roof. It went up $25,000 a contract, like a $5 move in the beans in one day. And then within a couple of months, it was right back to where it was. And that was just an isolated spike up. So I don't believe that, long term, the dollar is going to be a little bit friendlier, stronger, make it a little bit harder for the exports. But we've got so many other things coming up. We've got the acreage number, the stocks numbers. We've got the weather. We've had fairly decent weather, but it doesn't mean that in July we can't turn the heat on. We've seen sudden shifts in the weather. There's still at least one guy out there predicting that it can be very hot and dry in July. So we went up pretty fast. We went down pretty fast. Maybe we can go up fast again.
Okay. Technically, where do these markets sit from a commitment of traders standpoint?
Well, the funds, unfortunately, are still very long on corn and beans. They've come down. They were about 250,000 long, the corn, into last week. As of Wednesday night, they were long, I think it was 100, they were long 200,000 on Wednesday night. They probably sold about 50,000 in the last 2 days, but that still leaves them long 150,000 contracts. On the beans, Wednesday night, they were long 175. Maybe they've carved that down to 140, but those are still fairly large positions, and that's still a problem for this market if the weather stays good.
Okay. On the corn market, when we look at this nearby corn crop, let's look at July contract. Old crop corn down 53 cents. A lot of producers were still sitting on old crop corn, waiting for the next little bit.
Yeah.
Is $4? I mean, can we come back at that from $3.84 here in the short term on that old crop corn?
Sure, if we turn it hot and dry in July, we can do anything this market wants to do.
Okay.
The last time I was here, we talked about the American farmer. We've always had at least one opportunity to market grain at profitable levels. We had this opportunity in the month of June, corn and beans, to get it done. Now, I don't know whether guys took advantage of some of the recommendations we made out here, but they had the chance. Now, they've really got to hope and pray that we do turn up the heat in July to get another chance.
Okay.
And that's really a 50-50 coin toss.
All right. Now, speaking to that, as we look at this new crop corn contract, for producers who maybe didn't make as many sales as they'd planned before this thing collapsed here in the last week, as they're making sales, physical sales, let's say, are you an owner in here of calls or of re-owning futures?
Yeah, absolutely, particularly before the report. And I don't want to do it the day of the report, the day before the report, because they'll build too much volatility in before that. But here on Monday, Tuesday, if you've got corn sold out here, you want to re-own it with some call options, this report could show less corn acres out there. The stocks numbers could be tight. We've had unbelievable export demand on the corn. So on this kind of a break now from 440 down to 380 something, do I want to look at buying calls to replace any grain I've sold? Absolutely. Here's a great opportunity for you.
Do you have any thoughts on this report? Any numbers rattling around in your head?
I personally believe corn acres are going to be down, maybe not as much as some people think. There's even some talk of maybe a few more corn acres. I don't see that. I think we're going to lose 500,000 to 1 million acres. I think that's going to go into the beans. I think beans are going to pick up some land in the south, cotton, rice, and beans I think can be up 1 million to 2 million acres.
Okay. Well, let's talk soybeans. Big down week.
Yes.
Big down week. You mentioned Thursday night, we saw 25 cents off and then climbed back throughout the day on Friday and then finished still sharply lower again.
Yeah.
Where do we go in this bean market from here looking at this dollar with so much strength?
Frankly, the beans have had some amazing strength in here. Even though we're down $1.18, I think, off the highs, or $1.16 off the highs, we haven't collapsed this thing like we could have. Back in 2008, we were at $10 beans. We had one rain. We were limit down. Now, granted, those were 30-cent limits back then, but we really did some quick, hard damage to the market. We saw one day where we were sharply lower. Corn was limit down that day. But the fact of the matter is this thing's been pretty orderly, and we've had rallies even on the bad days. When they put in the rain and we had all this rain in Chicago, the market started to rally. And I'm looking at, why are we rallying this bean market? But there's some independent strength out there. Even today, we were on our lows with 10 minutes to go, and we rallied at a dime. So is there something more out there? I think what the market's trying to tell us by the harder sell-off in the corn is that maybe the heat won't hit in July. It may hit in August. And obviously, we know that if we hit the beans in August, we're going to do some damage out there.
And that concern of hitting the beans with heat in August, from some of the producers I've talked to, is the specific reason for not being very aggressive on physical sales.
Right.
How does a producer handle that uncertainty for August in a year like this?
Well, you're going to be surprised when I say you should have been buying puts. We had $12 beans out here, $11.80 on new crop. Not to have a put protection with the funds long as much as they were. Even if we do have a hot and dry summer and we go to $15 beans, was it worth 40 to 50 cents to protect that price? In our opinion, it was. Now guys have got a legitimate floor in. We still hope that we're going to see higher prices, but we're actually been able to roll some of these puts down already just in a week. The corn puts, we had corn calls we were able to roll up, take money out of. We moved the corn puts up, made cash sales. Now those corn puts are paying off down here and we're rolling those down. These markets present incredible volatility and opportunities if you're willing to take advantage of it.
The market closed Nove beans Friday at 1078.5.
Yeah.
Do you buy a put in here?
Yeah, only because the funds are so long.
Okay.
And you could have a bearish report on Friday. Would I spend a lot of money? Probably not, but would I do something short term to get through the next 30 to 60 days, in particular the next 30 days?
Okay.
Get you through the report, get you through the July heat if there is any. So you come out and buy a short dated or a serial option, a week for something that can protect you for that 30-day time frame. An August put will do the job. You don't have to go out to November and spend that time value.
Okay.
But I'd still spend 25, 35 cents on a bean put here.
Gotcha. Well, let's talk livestock. Friday saw the cattle on feed report. Were there any surprises that we should be aware of come market open Monday?
No, I think the bigger surprise was the Brexit effect on the market, taking the stock market down. Cattle had a tough day with that. Cash market came back a little bit on Friday. There were no real surprises, but the numbers are still big. The placements are big, on feed is big, and we're going to be seeing more and more cattle come into this market. The hope has been that the demand would offset these bigger numbers. So far, we haven't seen that, which is why we keep hitting these lows. Now, the good news is every time we've had one of these spiked down lows, we've had a 10 to 13 cent rally just off of, I think, every one of them out here. So people are saying maybe the summer lows are in. We'll have to see. But the fact of the matter is, you've got to look at selling rallies in this market because we do expect more animals coming, for quite some time.
And are you aggressive selling as far out into the future as you can, or are you limiting it to just the next quarter? How far out would you be making sales on a rally?
Well, certainly 6 months, I think is reasonable out here. If you've got some reason why you don't want to price cattle out that far, then again, you have to look at the options to help you. They're not particularly cheap, but there's still a lot of risk out there. The hog market's another one. Inventories were up. We keep bucking against $90 on the summer month hogs. Best as I can remember, the only time we've really gone over that significantly is when we had the ped scare. This $90 ceiling, and it's held here again. So we're at 85 roughly. Would I be buying puts on this hog market? You bet I would.
Are we going to take another run at 90, do you think, in this hog market?
I think it's as much a function of what the cattle are going to do. If the cattle continue down, it's going to be harder and harder for the hogs to maintain a rally. If we can get the cattle to have one of those $10 or $13 rallies, maybe we can get another shot even above $90 again.
Okay.
In any case, buying puts makes an awful lot of sense to me here on the hogs.
Now, you touched on the hogs and pigs report. That also came out Friday. Any big surprises there?
No, pretty much on the money, a little bit bigger on the breeding, 1%, and all hogs were up 2%, I think. So it's not like we're running out of hogs out here, but we've had good demand for the pork, which is the reason we've been looking at $90 hogs out here. But as you go toward the back months in the fall, you'll notice that there's a big price discrepancy. Now, keep in mind, guys don't want to be pricing it because it's $10 and $12 under where the board is now. But the only reason we're at those kind of prices is because the nearby pulled it up. That's usually a pretty good opportunity to sell something that maybe has a higher price than really is warranted, only because of what's happening in the front months.
Now, hogs had been deriving quite a bit of support from the surprisingly strong exports that we've been seeing in the pork market. With this Brexit, with the dollar in upheaval, is that called into question?
It certainly is. I mean, that's another factor that can be a negative for all of our commodity markets if the dollar stays high. Now, could this be a one-off deal in the bonds, in the Dow, in the dollar because of this Brexit. We've seen that before, a knee-jerk reaction, then things settle down. So I think we need to see Monday and Tuesday how we react to this. If there's more of a trend where we keep bucking higher in the dollar, then I think it's not a one-off deal that the dollar is going to hang in there with some strength.
Okay. Now, I glossed right over feeder cattle, and feeder cattle were the only market that were actually up on the week, up $2 on the week.
Cheap corn.
Cheap corn. Cheap corn. We did see feeders break hard with corn on Monday, but now we seem to have caught back up. Cheap corn's moving.
You know, I think guys look at it and say, okay, this is a good opportunity. Maybe the summer lows are here, corn's cheap, let's buy something. So I think we saw the funds come in. I think we saw some professional buying in here. And I think during the week we saw actually some guys buying the feeders and selling hogs against it, which put a little bit of pressure on that hog market.
Okay. Well, Mark Gold, thank you so much for taking the time to join us on this eventful weekend.
It's been quite a week. Thanks, Mike.
That wraps up the broadcast portion of Market to Market, but Mark and I will keep the market conversation going, including answering more of your questions during Market Plus, which is available on our website. And while you're there, check out the newest podcast from the producers of the program as we go beyond the headlines to hear about upcoming stories and learn more about our market analysts. Join us again next week as one group of farmers seeks to bridge the urban-rural divide with a tour of the countryside. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.